Welcome to the Company Value Investor channel. In today's video, we are going to do a follow-up on the fundamental and technical analysis of the Overstock.com Corporation. The original video was created on August the 19th, and in the video, we talked about possibly selling options, in particular selling puts, so that you can make money. Let's go over the video. Okay, so basically what we said is at the time the stock was $126 per share. We decided to sell a put on $120 strike price. That gave us a 73% probability of winning and a 26% probability of losing. Because our target is about 80% probability of winning, we decided to use it. Now, based on that strike price at that time, someone was willing to pay us $350. Well, the market was willing to pay us $350 to $380, anywhere between the bid and the ask for that particular option. Okay, and the auction was due to expire that Friday on August the 21st. Options usually expire on Fridays after the market closes. So it had an implied volatility of 138%. So volatility was high. And all we needed to do was sell one lot meaning 100 shares of this stock, the put. It would have cost us $12,667, the price of the of each share for 100 shares. And in return, if the price went below 120, what would happen is we would take hold of the shares at whatever price it would end up at the end of Friday. But in return for that, for the option, we would get paid about $350, earning us a percentage of almost 3% for 2 days. Okay, now let's go back and see what the stock ended up. On Friday, after it closed, the stock ended up to $121.09. So because it was above our strike price, above our contract, we automatically kept the money, the premium that was part of the contract. And because again the price was over 120, at the end of Friday when the market closed, the contract expired and everything went back to normal. The person who bought the put kept their shares, and we did not have to buy their shares, or their shares were not transferred to our account. The only thing that was transferred was $350 to our account at the end of the closing market on Friday. So sometimes when you're on YouTube and you see these individuals stating or telling you that they made $300, $400, $500 in 5 minutes, it's probably true. Because when it comes to options, specifically puts and calls, as soon as you make the transaction, you get possession of those $350. So in our case, whatever needs to happen or should happen in the future, it really doesn't matter, because once we enter the contract, we get the $350. So most of the time, I think that when they say I made $500 in 5 minutes, it's true. But remember, we analyzed this stock before we decided to purchase it, and that was the benefit, is that we were able to, using the indicators, we were able to get a good idea or speculate that the price was not going to go below 120. It went as low as 121. Okay, so let me try to explain a little of how options work, in particular puts. Think of it as an insurance premium. Let's say investor A has 100 shares of Overstock, and investor A wants to protect his stake of 100 shares, and me, investor B, I go to investor A and I tell him or her, look, I'll take possession of your shares and buy them from you if they fall below $120. And for me taking that risk, you'll have to pay me a premium, and that premium is basically $350. The premium is set by the market, and the size of the premium depends on the volatility. Now there's a lot of little details that I'm not uh, that I'm not explaining. That's because it's a lot to learn. I'll give you information on individuals that can do a better job of explaining how options work. But I'm trying to give you a very basic explanation of how to consider using them if you think that's for you. Now, just so that we're clear, I did not purchase or I did not sell any options on this stock. Remember, if you go back and look at the video, I would not invest in this stock, whether it's options or buying shares, only because I believe that the stock is overpriced. Go watch the video so you can get a better understanding. So back to the option thing. So because of time decay and implied volatility, the price was $350. Now, just consider this. If you decide to do this, and once you become proficient or semi-good at it, you can make money selling options. If you do this type of transactions every other week, you do 2 or 3 different transactions, you can easily make $5, $6, $1,000 if you focus and you understand the intricacies regarding options. Again, the things you have to look out is the days of expiration, the volatility, margin. If you're trading on margin, the amount that you're going to get, is it worth it? The daily amount and your strike price. The most important thing that you want to focus on is if I sell this option, enter this contract, do I have a strong probability of winning? And if you believe that 73%, 80%, or 90% is your target price, then and you feel comfortable, then by all means sell the option. But everyone has their own probability of winning. Mine is always 80. Some people's are 90 to 95. Remember though, the more implied volatility that the stock has at that particular time will depend on how much money you might earn or have the potential of earning. You're going whether you have to take control of the shares or not, you're going to make this money as soon as you enter the contract. Okay, I hope that makes sense. Like I said earlier, there's other people that are much better at explaining and providing detailed information. There's this individual, let me see, Lee Lowell. I read some of his work. Very smart individual, has a ton of experience regarding options. He puts out I believe a weekly newsletter and has really good videos. I have no affiliation with anybody. I've never met the individual, but I read some of his work. I really like it. If you have time, look over his videos, subscribe to his channel, and I'm sure you will get a better understanding and working knowledge on how options work, both the puts and the calls. If you're a beginner, and you want to know how to open these types of accounts, like margin accounts or whatever, whatever trading platform you use, this individual, the Investor Show by Prince Dykes, he has a lot of good videos on how to use the different types of platforms, and he does a very good job of describing, what type of account this is, or in particular margin accounts. So check him out. I am sure that you'll get a great benefit from his information. Now back to our video here. Now, just to end this video, I'll make it very clear that during the analysis, I believe that this stock was overpriced, and we did the analysis. Go back to the video, use the link, and use the stock options timer here to go directly to the section where we describe and talk about why we chose that strike price, so you can get a better understanding. Again, it is just another way of you, the individual investor, I'm hoping that you make some money through different venues, meaning different ways through the stock market. Options is one of many ways, but you have to be careful, specifically with margin accounts, because margin accounts, basically whoever you're trading with is going to loan you money to, in my opinion, speculate on a stock, whether it's going to go up or down, and then hopefully everything goes your way and you're able to make money. I've known people that make good money through options, but my recommendation is look over the individuals that I presented to you earlier. I'm sure they will have better information. Always be very careful when it comes to speculating on short term, such as we did in this video and in the other. Okay, remember, cash is king. $1 today is worth more than $1 tomorrow. Buy low and sell high. With that being said, I wish nothing but good things when it comes to investing. As always, take care.